Good morning, good afternoon, good night. Welcome to the BitLab Academy daily live stream. My name is Kellam. Welcome to the show. If this is your first time, I can guarantee you it's not going to be your last time. We break down everything that's going on in the market so we can understand how to navigate this digital ecosystem, Bitcoin, altcoins, Ethereum, Cardano, AVAX. Sometimes we'll touch on those meme coins, but I do not recommend those as a source of income. It's like gambling in a casino. So we do try to bring up the charts that you all ask for and not just give you signals, not just give you targets, but actually break down a little bit about what's going on and how to utilize support and resistances and different chart formations and on-chain data and fundamental analysis, quantitative and qualitative, as well as technical analysis. So the point here is to bridge that gap from beginner to pro. So let me know if there's any issue with any audio or visual. I had to reset my computer about 4 times, which is why we're 10 minutes late. Sorry about that. Shout out to everybody that's here in chat. I'm gonna look for some ones in chat to let me know everything's good. Right now, I'm just gonna call everybody out. A mellow fellow, first one in. How you doing? Karen Swigart Harris, Jackson Crawford, Alexandra G. How you doing? We're gonna be missing our boy Alex Green today. He is at a conference. Sawtooth Hiker, Total Clinic Solutions, Mike Vollmer, Newark JK. Are you just joking that you're from Newark, or what's that all about? Mike Vollmer, unforgettable name. I'll be taking care of you later in our private messages. Brokoshi, no dinero. Learning, how you doing? Taz Gogs, we got everybody in the house today. I bet Gia S will be in here at some point. Crypto 420, Creighton C. Who else? B Team Crypto. We got everybody in the house. Matt C. All right, we're looking good. Looking good. Let's go. Have you hit that like button? Have you hit that subscribe button? Have you dinged that bell? Well, I hope you would, because it helps drive the content of this channel forward and lets YouTube know you like Bitcoin, crypto, and basically crypto content. So with that being said, the new website is up. If you have not seen the new BitLab Academy, I will heavily advise, if you're not already on this email list, go ahead and enter your email here. The autoresponder that you're going to get, the first message you're going to get is a 30% off coupon code. If you're wondering why only new subscribers get it, it's because I already sent out the email for all of you that are already on the list. You should have already had this email, and you also had the opportunity a few days ago to not only get that 30% off, but to get in before the prices went up. Well, now the prices have gone up, but you can still take advantage of that 30% off coupon. Just put in your email here. It'll take you through a thing to confirm, and then it'll bring you right back here. And then for anybody that wants to sign up, easiest way is when you're not logged in, up here on the top right, it'll say log in or enroll. Just click that enroll, and it brings you right to the enrollment page. You can also click right here on start your education for free, because we do have beginner friendly stuff here in our site. Basically beginners platform, like what is Bitcoin? What is blockchain? How do I self-custody? But if you're really looking to learn in terms of trading, analysis, technical analysis, on-chain data analysis, trading fundamentals, trading strategies, all these things that are going to be continually being built up. We've got about 100 new lessons. Click right here, hit all access, join this, and you can use that code by coming back over here to the BitLab Academy page. And when this page comes up, you see, just put your information in right here. You will get access to that code. Now, what is going on today? Markets looking like they're getting a little bit of a push. Well, does this mean that this is super bullish, or is this uncertain? Is this super bearish? Let me know in chat. Do you think that this is a bull trap? Now, first step is, what the hell is a bull trap? Well, a bull trap, we tend to only really identify this on medium to large time frames, but in reality, there are bull traps and bear traps all day long, every day in markets, depending on what time scale you're looking at. If you're looking at a time period of, let's say, 3 minutes, you're going to see market cycles play out very, very quickly. Now, if you're looking at it on a 4-hour daily or above, it's going to take some time for different moves in the market to resolve into a certain direction. Excuse me, have a push. You're going to have a necessary pullback to test the resolve of the bulls. The bears are going to make that attempt. When the bulls higher low and higher high and higher low, then that's a healthy movement in the market. So right now, what everybody's trying to wonder is, are we going to go up in a straight line from here? First off, we should never want that, because it's typically our greed gets triggered. When our greed gets triggered, we forget to protect our assets. We got to protect our assets, right? We got to do that. We got to make sure that we are trading with strategy and we're trading with the plan. So again, if you have not yet, hit that like button, hit that subscribe button, and ding that bell. Let's get into it. Now, coming back over here to the page, make sure you're coming over to BitLab Academy, which is at Academy BitLab. This is the only one. There's a fake account out there that's BitLab_Academy. Block that, report it. That's a fake account. Somebody else did that. This is the only one that we could find when we were setting this up. The Academy BitLab is the only account. And come down to today's daily post. Make sure you're following the BitLab Academy. Retweet this daily post and hit this like button right there. You'll be entered to win. We're going to be doing a good giveaway this Friday. This is how you enter it to win right here. Just helping support the channel, helping support and being a part of our community. So, Brian Maver, what's up? We got Crypto Dom, Tenacious B, Creighton C. We got, oh man, so many people in here. Now we got 116 people on, only 46 likes. Let's get that up to a bajillion today. Let's break the record today. Now, if you are watching over on on Hit Network, first off, if you haven't checked that out, maybe when there's nothing else going on or whatever, make sure you go over to the Hit Network YouTube page, which is, let me see if I can find it, which is right here. This is what it looks like. It's at Hit Network Official. And they have a 24/7 stream. Basically, they air a lot, not only the Hit Network stuff. We've got a couple other partners like Windio and Sin City Crypto, and amongst some other people. But this is running 24/7, so check that out. If you are watching there, then I do want to highly recommend that you do come down to all these socials that are down here. Give us a follow and check out. How could you not check out bitlabacademy.com's page? And that is right here. Boom. Make sure you check us out, youtube.com/@BitLab Academy. Come give us a follow. We're just shy of 7,000 people. So if you're watching right now and you're not subscribed, do us the ultimate pleasure and ultimate favor of hitting that subscribe, joining our community. We go through a lot of stuff. We break down. Of course, we've got the full breakdown of everything and deeply in the new BitLab Academy. But here on the stream, we do break down a lot. We give a lot of just a great free content away. Okay, so we can see right here, just to refresh you all, this is the current courses that are launching on this update. It's already launched, I should say. And you can come through all this and we can see, for instance, if we come down to candles, start course, I'm just going to give you all a sneak peek, sneak preview. Come in here. See, we have some reference materials here with some keywords and some basically support there. And then you come in here to continue. And once you continue, then you could go right in here. You see it's all broken down. You come into a course, you got the times. And then I just wanted to point this out to everybody. As you're going through, we got to fix these thumbnails. As you're going through this, you'll see once you get towards the end of this, there is a quiz that sort of auto-populates in the bottom of each lesson. And then we, of course, have a master quiz towards the end of this. And we're adding stuff to these courses as we go on. There's going to be more and more and more and more stuff. So this is where you can track your progress. And enough of that. Let's get into these charts. CPI came in 4.9%. I think it was, I actually don't remember because I'd set up 42 charts this morning. Yeah, 4.9 under 0.1% under expectation of 5%. What does this mean? This means that the consumer price index, basically based on a basket of goods, that they take an index nationally and sort of pull different prices from different select things. So we can look right here. What is, let's see, you see this? I was working on this is why I was late. I had some issues with some tech stuff, but what is calculated in CPI? It's always good to know this stuff. Consumer price index is a measure of the average change over time in the prices paid by consumers for a representative basket of consumer goods and services. So this goes from shelter to food to I think energy is in there, but in a particular way. They have a very sort of narrative shaped way that they pull this data, because even when the consumer with CPI, even when inflation was quote unquote 7 or 8% a few months ago, I would argue that, what I was experiencing was most of the stuff I was buying was sometimes 17 to 30% more expensive. But then we always have to remember, each one of us as exposed as we think we are. Each one of us lives in a bubble. It's the bubble of our own reality. And so while prices may have been exorbitant here in New York, maybe it didn't have that big of an impact in, you know, small town in Iowa. And there's, you know, thousands and thousands of the, you know, that middle America that we have to pay attention to. So I'm just going to go through this really quick, and we're going to be breaking down a bunch of charts today. We're going to be looking at technical analysis, as well as on-chain data analysis, as well as some of the traditional finance, basically traditional indexes and stuff. We're seeing that right here. We see the prices are moving up. Dixie is it's trying to fall, but it's not quite, it's nothing definitive here. This is attempting to bounce. Dow Jones, Bitcoin came right up into this zone. Do you remember yesterday when it might have been yesterday or the day before, when I was doing TA on for everybody towards the end of the show? We can see that this is coming right up into the zone, which was option F. Let me see. This was the area I was talking about. This wick came right into this golden pocket, and we have this larger sort of formation that, remember, comes all the way back to here, and we're basically finding resistance right on that, in confluence with just below where the golden pocket is. So is this a pump or is this a bull trap? Remember, when we were talking about bull traps and bear traps and just traps in general, none of us want to be trapped. We want to be able to take trades on the confirmation of a move, and in this case, fall down quite quickly. We can see the relative extreme of signaling these bars green was saying that this was not, this was more, I don't want to call it a manipulation. There was not really the healthy amount of pressures and movements for this to move down like this. And then what happens, we end up consolidating sideways shortly after this, right when we get this blue wave down here on significant movement. And then we see right here, as soon as we broke, if we zoom into this on the 1 hour, we can see right here, we've got option T. I got to move my mic so I can see my dang keyboard. Option T. We got there we go, trend line. So we've got a bit of a trend line right here of these tops. And come on, there we go. We got a bit of a resistance line here. And as soon as we we didn't even touch this, we just zipped right through it. We can go on a much smaller time frame if we want to. The larger the time frame, the stronger the support or resistance. But we can see right here, we've got a bit of a trend line right here that as soon as we broke out of this, boom, shot out to the upside. Now, with this being said, I'm not going to look at this candle, and I'm not saying this is not going to continue up. We have to look at this with the concerted sort of analysis with multiple signals across different indicators, measuring different pressures and different signals and different momentum within the market, so we can get a full picture. And with this is nice. But if we zoom out, let's look at this on the 12-hour. If we look at this on the 12-hour, look at this. All this has done is come back up into this level of resistance. To me, this is not a pump yet. To me, this is currently, it's only a relief from this fall. We want to get past the relief stage and into the pump stage. And we're going to be talking about that. We're going to be diving into that. So before we do that, I just want to jump in with everybody. Mr. Kellam said he was working in the lab late one night. Yes, I was. You know what? I'm here all day, every day. When we're not on stream, I want a special shout out to Ray and Craig and David, back-end team support at BitLab Academy, especially also Alex Green. I mean, it's taken such a village of people working nonstop, getting these updates out for BitLab Academy. So I just want to say special appreciation to them, and special appreciation to Ben, BitBoy, and TJ for bringing me on the team and basically giving me putting me at the helm of BitLab Academy and basically taking it in the direction, basically taking control and taking it in the direction I want and rebuild it. When I came in, I said, I want to rebuild this. I want to throw out everything and I want to rebuild this from the ground up. And it's been taking forever, but we got it out. So again, if you have not yet, head over to bitlabacademy.com and sign up for the newsletter, and you'll get a 30% off discount code, which is only going to be available for the next couple days, you know, as we're getting, as this launch has started. So get involved with that. And I'll just say it once. You guys can scroll back if you want, but it's give me 30. It's the only time I'm going to say it. And you can use that for the courses or the indicators. If you want to come over here to the BitLab indicators, come down here to BitLab indicators. and you'll see basically right here, you can sign up right here. We've got a lot of updates coming to the indicators, the trading stack as well. So I'm not on the page, my bad. So you can come over here to BitLab Academy, come down to indicators, go to BitLab indicators. Now, this is a home. Sign up. Give me 30 is the 30% sign off. And you'll see enroll up here on the top right. That's where you can just pop right in, enroll, throw in that coupon code, hit apply, and you're going to get it. Now let's talk about what we're going over today. We got 182 people in here, 74 likes. Hit that like button, hit that subscribe button, ding that bell. I got my Discord open with my mods. If there's any pressing questions or specific TA you want me to do, if there's just any sort of consensus around it, I'll definitely try and hit that. Super chats definitely will get priority just because they're going out of their way to share their love. So, and I'm not pressing anybody to do that, but if somebody's going to give $10 and somebody's not, then I got to make sure that I'm taking care of the people helping pay the bills. So with everything going on in the market, let's start with CPI, and then we're going to get back into the charts. Now, I set up okay, I just wanted to make sure. I had to restart my computer before it went live, so I didn't know if all my tabs opened back up. So this is what I want to talk about. Let's just look at this sort of historical sort of trend of where inflation has been over the last couple months. So I'm going to take my face off here so we can see. And when you see this, what are you seeing when you look through these numbers? We could see a bit of an arc, right? And if I can't do that. You know what? I can go like this. I forgot I got this tool so I can, oh man. Give me 1 second. There we go. This one correct? Okay, cool. The arc that I'm talking about is these numbers, as we see them progressing, is essentially like this. Right? And so if we look at this trend, oh, you cannot see this? Oh, I have an epic pin on here and it's not, I guess, God dang it. Just trouble with tech today, gosh darn it. Let me go ahead and erase that. Essentially, screw it. Okay. Essentially what we can see is this right here with inflation. Okay, that's what I drew, and you couldn't see it because the technology is messing up on me. All right, so gotta shake it off, right? So what we're seeing is that this trend in inflation sort of bell curving to the upside and coming back to the downside. And with this, are we going to expect this is going to continue down? Well, we're not going to really know this because there's a number of global impacts. There's a number of global, oh, sorry about that. There's a number of things that happen globally that can impact what happens with cost of goods, cost of supply chain logistics, cost of producing things. For instance, remember recently we had the OPEC basically cut oil production, and it had a little bit of a tick up. We talked about that yesterday on the stream with Caleb Franzen, but you know, this is something because that target price I think that they're looking for has not quite been achieved with what they want with oil. And so that's something that very, very well could happen again. Now, that may not have an immediate impact on inflation, but it definitely will have an impact, you know, 3 to 8 months down the line as that oil is processed and then sold, and it's sold at a higher rate because there's not as much going around. Yeah, hit those heart buttons, hit those emojis in the bottom, drive that engagement. And by the way, we're getting a lot of new people in here recently. So if this is your first time, let us know it's your first time. Hit that subscribe button. If you've been here from the beginning, throw an OG, and then also let us know everybody here. Everybody, I want to see everybody in the chat. We got 174 people. I should see 174 different locations. Where are you tuned in from? What city and state, or what city and country? I'd love to see where everybody's tuned in from. Now, looking at this, we're seeing that this is trending to the downside. Now, on the one hand, this is good because I tuned into a Spaces earlier today with Peter Schiff and not because he was on it, but it was him, Caleb Franzen from yesterday, the Wolf of All Streets, and a couple Crypto Man Ran from Crypto Banter. There's a bunch of kind of mixed traditional market people. Now, while this is good, we're seeing this trend down. This is also puts Jerome Powell in a sort of precarious situation, because what they're doing is it because they're hiking interest rates that's bringing inflation down, or is this also something that's happening post global economic shutdown, March 2020, where things are sort of getting back to some sort of semblance of normality? I think there's probably a little bit of both, because spending and credit and debt was kind of, in terms of personal debt and personal credit and personal spending, was kind of sort of moonshot after the global economic shutdown, because we had stimulus. But then also, when you coop people up in a house for a year or more, when I was in New York, it was basically about 10 months where we really didn't even leave the house. I mean, it was like I Am Legend. It was like a zombie apocalypse outside. There was nobody on the streets. It was very bizarre. And I traveled a little bit for some things during that time period. And it was shocking to me that the other places I went were nothing like it was in New York. I mean, it was like, oh yeah, there's a cold. In New York, it was like bodies outside of hospitals, and who knows, at this point, with all the news and information that's come out, I don't know what I believe anymore. I just know that when I was here in New York during that time period, the city was shut down, and that's what I'm speaking to. It's the fact that the economies were slowed, and what we were able to do was limited. And what tends to happen when you have a pendulum swing one way, it tends to swing with about almost about the same amount of energy to the other side. It's almost 1 for 1. It's like such a minuscule amount less than that. So if we were shut down and couldn't do things and couldn't really go out and explore and couldn't spend money and couldn't, basically live our lives, and once the economy opened back up globally, then people also took that stimulus money, had a newfound sense of freedom, because a lot of people that worked in office jobs now are okay to work at home. Now, there's been a massive cultural shift in the last 3 years, from jobs to spending habits to our trust in the system. I mean, it's unequivocally true, regardless of what side of the policies you're on, that's irrelevant. The data, the numbers that we're looking at when we're looking at these data points, Jerome Powell had to do something, because there was inflation that was out of control. We had to curtail some people's spending, and they wanted to also affect a little bit of the employment rates, and we've seen that be resilient, which is actually good. It means that we're having plenty of jobs, but we are starting to see inflation come down. We come over here to this next chart here. We can see the food component of CPI year over year. Food inflation of plus 0.76, down from 0.875. So we may start seeing a little bit of disinflation on some of the food costs, but we'll see. I mean, I'm not going to be shocked about anything that happens in the next 2 or 3 years, because and Peter Schiff was right to point out, regardless of if you like him or not, he invests just like everybody. He doesn't like Bitcoin, but he invests in gold. And I'm not going to hate on anybody for what they invest in terms of assets that are within a traditionally accepted marketplace, right? There's other things you can invest in that I would not agree with. But in this case, to each his own. If I invest in Bitcoin and you invest in Pepe, well, I'm not going to take your advice on what to invest in, but I can wish you well and hope you do well in your investment, sure. And what he pointed out was, and this has been known for a while, the U.S. economy and the U.S. government and the policies that we have with our banking system are so, I don't want to say fraudulent, but they're so misguided and skewed towards keeping people in office versus actually doing what they're supposed to do, which is keep the economy and keep the people safe in this country. And this is true for any nation. People are so focused on what the public perception is, they forget to do what the hell they're supposed to do, okay? And Peter Schiff pointed out, in 2008, the banking collapse, there should have been fewer bailouts. It would have been terrible for the economy, yes. But you know what happens regularly in nature? We have forest fires. You know what happens with forest fires? You clean out all but the most resilient trees in that forest. And even if you cleared out all of them, the ground becomes more fertile after that. It's literally a natural, it's a nature cleansing mechanism to basically restart a life cycle. And the way the banking industry is right now, and don't worry everybody, we're going to be getting into Bitcoin, Ethereum, Cardano, and a bunch of altcoins here in a bit. So why don't you start throwing those coins in chat that you want to see some data on, and we'll be pulling those up. Yeah, I mean, the 2008 crisis, we need to have less saviors of corporations and more saviors of citizenry. And I don't mean saviors like stimulus, because that is the wrong mechanism. That means when you give out handouts to people that can work, all you're doing is subduing them so that they'll become more reliant on you. What we need to do is we need to have the system fail if it does fail. And all of us need to protect ourselves with the way we navigate this market. We need banks that aren't solvent to fail. We don't need them bought by another bank. Then you're just repackaging the junk to somebody else and then kicking the can down the road because they're big enough that we need to make sure it's a systemic risk. No, let the systemic risk play out, clean all this nonsense up, and let's get this moving forward. But you know what the best part about all this is it has nothing to do with the banking system. It's the fact that each and every one of us is here for Bitcoin and for digital assets, and the fact that this is the antithesis of all those issues that we see in the traditional banking system. It's decentralized. It's immutable. There's no fraud on it. Now, can somebody scam you? Yes, but that's only because you are not being responsible. Did somebody scam me? Yes, because I wasn't being responsible, but I'm not going to say it's somebody else's fault. When you point anywhere else, you're pointing three fingers back at yourself. So let's all take a bit more responsibility. And you're already doing so by being involved in the digital asset ecosystem, but nothing is guaranteed. So we got to protect ourselves. We've got to make sure that we're practicing healthy risk management, and we're practicing executable, repeatable, executable strategies that we can adjust and adapt over time with the markets as they change. Now, let's get back into these last few things on the traditional market, because what we really care about is Bitcoin and traditional assets. So I'm sorry, guys. I did not eat breakfast this morning. My computers were making me want to put my fist through a wall. And so as you can see, I'm a little fired up today, and you're hearing what's on my mind. So if you like what you're hearing, throw a 1. If you think think the rant's a little too much, put a 2. If you put a 2, I'll just do it. I'll just rant a little harder next time. But I want you all to know me, and I want you to know what I'm thinking and feeling. And I'm going to share my thoughts, and I'm going to share my opinions, because we all deserve to take responsibility for ourselves. And what does that mean? That means we all deserve freedom. To have freedom is to take responsibility for yourself. So let's take some damn responsibility for ourselves. Let's go through these charts. Now, looking here at the New York FANG, this is, what is FANG again? Facebook, Amazon, Netflix, Google, okay? We can see these are the tech powerhouses of the traditional finance ecosystem, traditional asset ecosystem. We see this massive downtrend right here. We've broken out of this. See here, kind of retested in this cloud, came up, found this level of resistance. How could we have predicted this level would have resistance? What does Bill Noble say? We're going to, hopefully we'll be having him on again this Friday. We look to the left. You can always look to where previous price action had interaction. Where's the price memory? Where's the price memory in this chart? This is where there's going to be interaction. Is it because this is what happens in charts? Or are charts a little bit of a self-fulfilling prophecy because we humans are seeing what other people have done before, and we think, oh, if this is pushing up, maybe it's going to reject here. And you got 30 or 40% of the market thinking that, so they start taking profits up into this zone. And then once it fails, it's like, oh, I better get out if it comes back into here. So you're seeing the psychology of the market play out. Whether you're looking at a traditional finance, traditional asset here, like the FANG, this FANG index, or if you're looking at Bitcoin, or if you're looking at Cartesi, it doesn't matter. Chart patterns play out the same because these are representations of humans. And unfortunately, humans are very predictable. If you want to be unpredictable, if you want, here's something to think about. Do you want to be successful? Do you want to have money? Do you want to be able to have enough money that you can choose what to do? Do you want to have enough money that you can not only choose what to do, but that you can provide a platform for your loved ones to feel safe and taken care of, and you're not worried about medical bills, you're not worried about all these things? In order to be able to do that, you got to stop caring about what other people think. Watch what they do. This is what they do. You're seeing what they do play out in price action. So in life, if you want to succeed, you need to learn how to go against the grain. You need to learn how to color outside the lines and make it look like art. And then you sell that rather than people thinking it's a stick figure. You can assign the value to it. So your life, your success is really it's pivotally hinged on your ability to do things different than others. Why? Because most people aren't successful. So for you to be successful, you need to do things differently than your peers. And in this group, we can all be a different subset of peers here. We can do things similarly here on this channel with our community here in BitLab so that we can succeed, because we are coordinating together to figure out what the strategies are to take advantage of these moves. See this W price, this W formation right here, double bottom, broke. You could have been conservative, not taking this at all. This is the neckline right here, right? And as soon as we break out of that, you could have taken advantage of this. There's so much available to you in the charts. Now, continuing on, let's get into Bitcoin. Let's get into the digital asset ecosystem. We've got 238 people in here. Only 126 likes. Let's hit those like buttons. Let's hit that subscribe button and ding that bell. Now, what I want to show here, this is the Rational Root, who I will be having on the channel. He recently launched his Bitcoin strategy platform. I'm not an affiliate by any means. I just think it's great because he's got such unique on-chain charts. What I want to show here is he's got some great custom charts that he's built. I'm going to take my face off so we can focus on the charts. Now, what I want you to do when you zoom in on any chart like this, like when you're looking at it, taking your eyes over the chart, as you can notice, obviously, I want you to do this as silly and as simple and as basic as this sound. Whether you're looking at on-chain or you're looking at price action on TradingView or whatever charting software you're using, look at all the data first. Don't assume you know what's on there. Even if you've seen this chart 100 times, I have looked at charts and made silly analytical decisions because I did not know that they adjusted or changed something in here. Rodrigo Funyat, I got you. We just been in the middle of the launch. I see your message. You were the winner of the 30-day access, the month that, yeah, I'll be sending that over to you. I just got sidetracked with the launch of the new BitLab. My apologies, sir, but I will get that to you. I wanted to make sure you got it after the launch happened, so there was no issues with it matriculating over. SAT word, matriculate. Now, looking here, I want you to look at all the data on the chart because sometimes things change and you want to make sure you're pulling the necessary information available that is best utilized from reading it correctly. So we can see we've got 1, 2, 3, 4 bands on this. We have this line right here. If you can't figure out that this is price action, then I beg you when we get off the stream to wash your eyes out and then also open up a TradingView chart and just zoom out and just burn that chart, burn the price action of Bitcoin into your memory. So because as simple as it sounds, even trying to understand what happens here, one of these or it's not going to play out exactly, but we can look to the left and get some sort of idea of historically what has happened as new adoption came, as long-term holders are buying, as retail starts buying again. This is essentially what we're seeing when we're looking at price action. Now, when we look at this, what I want you to notice is this center green line. It might not look green, but just on your screen, but you can see the center green line is a fair value. Now, what I want to do from here, and I want you to practice this with any chart set that you ever pull up. If you're looking here, say, okay, well, what does this mean? Okay, what are these? Well, all you have to do is look 1, 2, 3 bands. Now come back over into after this bear run, and let's look at how the price interacted in these zones. So we have 1, 2, 3. This has not even gotten up to this third band yet. Well, did it in the previous cycle low, it came up. Oh yeah, okay, got rejected right off fair value. Okay, back here, 1, 2, 3, came up, got rejected a little bit below it, bounced off this undervalued, and then came back through it. So where we're at right now, we can see that the bearish price action had basically met a floor right down here. What is this band? Heavily undervalued band. and basically bounced right at this band, which is proven to be a very strong value band. Now, the value map here, these bands, from what I understand from the rational root, essentially looks at not only sort of necessarily realized price, but it takes into account circulating supply and available supply. Excuse me, and available supply as well. So you're getting a more direct read of where value is and where price action could go based on previous trends, and also what's happening currently with the supply available in the chart. So what we're seeing here is that we're seeing a very weak, it's almost like this right here. You just got all the way down to touch down here at the bottom band, bounced up, and then got a little bit lower. But in this case, we're kind of straddling between 2015 and 2019 here. So, but the point here is the fair value here, even if we got rejected, we can see the fair value is $39,000. Okay. So it's important for us to realize that. And that doesn't mean, and this is, of course, is a speculative map based on data that was interpreted in a way from a particular analyst, but we can see this fair value has been very median sort of level of where price action interacts with the most. As we break above it, use it as support. When we're in a bull market, come down, use it as support, come down below it. Similarly, come down, find it as support, find it as support. Once we lose it, bear market, very bear market. So very good chart here. Now, we could just take a look at the global liquidity. We could see this is had a basically strong sort of V-shaped recovery here, but we're getting a lot of choppiness here, uncertainty of what's going on with liquidity in the global ecosystem. So we need to pay attention to this. And there's one other chart I wanted to show you here, the short-term holder cost basis. Now, this is the best representation of the short-term holder cost basis that I've seen. Now, I want you to take a second and look at this chart. What do you see? In this chart, we can see a key. We got prices. We got these standard deviations. For anybody that doesn't realize, when you're looking at something like, let me show you, look into... I hope you all appreciate that I don't just do charts and TA the entire show. Throw one in chat. Throw one in chat if you appreciate the intermixing of breaking some things down so you can understand. Because, of course, we have the full paid all-access BitLab Academy, but it's my mission to make sure that we provide as much value as possible so as many people as possible can gain useful understanding of the basics of how to navigate this market. And the only way you can do that is if you understand how to utilize the tools that are available to you. And many of you, myself included, have a long way to go to really understand. We can always grow. I say this a lot, but remember, pro athletes still have coaches. They still go down to the basics and practice putting 1,000 times, every 2 days, even though they're going to play a tournament later that week and they've done it 1,000,000 times before. You've always got to practice those fundamentals. Now, we're going to be diving into the TA here in about 10 minutes. Keep throwing in the coins that you want to look at. And I'll get a little link from my, I'll get some, I'll get a note from my mods over here. Now, coming over here to look into bitcoin.com, this is a free on-chain data site. If you ever want something, you don't want to go and pay for Glassnode or any of the other ones. There's also looknode.com or check on chain or chain exposed. There's a lot of free services out there. The data is going to be about a week delayed, but with on-chain, that's okay. But what I want to show you here is NVRV Z-score. When you're seeing something like this, these scores, these are essentially standard deviations, basically the separations of the metric being measured against another metric. So these two metrics are the Bitcoin price and how that is weighed against the separation of the Bitcoin price from the realized price. So you're getting a very strong read on the general health of the market. When you're undervalued, anytime this is down here in the green, meaning but down here in the green is basically below 1. And what we can see is, what we can see is when price is below realized price meaning the average of every coin that's in circulation the last time it moved. Will Clemente, if you have not seen that interview I did, we put it out on BitBoy Crypto. It's right over here. Boom. Where is it at? It's this video right here. I'll throw a link of it in the chat. Where did it go? Right here. I'm just gonna throw this. We released this on BitBoy so everybody could see it, as many people as possible. But definitely watch this. He really breaks down some really great information. Now, coming back over here. Now, when we're looking at the MVRV Z-score, we're seeing the value of Bitcoin traded on markets. This is the speculative price that drives up and falls down. This is the volatility. Realized price really smooths everything out and kind of shows a healthy assessment of the value of Bitcoin based on every coin on network the last time it moved. Now, we do have an entire on-chain data course in the new BitLab Academy, and I break this down a bit further. But we're seeing this Z-score, this oscillator. Now, if we come back over here to the Bitcoin strategy platform, this is similar. This is kind of like an MVRV, but this is looking at it's looking at the separation of the speculative value of Bitcoin price as it is separating above or falling far below the short-term holder realized price, aka coins that are on network that have moved within the last 155 days, the average price of every Bitcoin on the network that has moved in the last 155 days. So you're seeing a real-time, much more, it's almost like an exponential moving average of realized price, except it's not really, because really what it's taking into account specifically is the weak hands in the market or the speculative traders. It's not just weak hands. You could have a very, very adept, a professional trader out there that has a huge amount of long-term holdings, but they have, all the coins that they're trading on a daily basis. Those are going to be considered short-term held coins. And we can look at them being weak because in terms of the strength of the Bitcoin price, it's going to be weak because they're trading the volatility. So if price is falling, they're going to switch their bias. They're going to trade that price to the downside. When price pushes back up, they'll push back up. And we see as soon as price loses this level, and we can see it more clearly. We can come here, market valuation, cycle valuation, Bitcoin trend fit. This is my on-chain data chart. Very proud of it. If we turn off everything, come on, there we go. No, we don't want to turn off the Bitcoin price. We turn off everything and just look at realized price, Bitcoin price. The black is a Bitcoin price. Accumulation zone, which I identified it as that, but it's the long-term holder realized price. This is this line here, right down here. Now, the short-term holder realized price. As soon as we lose this level, look at this. This acts as resistance the entire way down until we break above it and we have a bull trend. Lose it. This was anomaly. Excuse me. Anomaly here, but as soon as we break above it, bull trend. We lose it. Get a little bit of resistance. This whole section was a little bit of a bizarre situation because of all the stimulus money we had in the system at that time. And this was still quantitative easing time. But what we want to do is we can read when things are very overheated or undervalued based on where the price is. And you see when you have these sharp ticks up on this standard deviations with the price being very separated from the short-term holder realized price. This means that everybody is in profit, long-term holders and short-term holders. And short-term holders, when everybody's profitable, that's when you need to take profits and get out. You probably should already have taken some profit. So this is a good thing to just take a look at. And not only do you see these standard deviations, why are these colors on here? There's not an error. You're not colorblind. What you're seeing here is anytime the price is below the short-term holder realized price, this flashes red. Anytime it's above short-term holder realized price, it flashes green. And we can see here, this bear market, we're basically under short-term holder realized price. Small little blips here and there. But once we get above it, look at this, up. Bear market, we're below short-term holder realized price. We're above it, up. And this was the black swan area right here. Once we're back above it, up, down. We're in that up phase right now. So I just wanted to point that out. And the last thing I wanted to show, we can look at this really quick because I haven't looked at it in a couple days. Yeah, we can turn this one off. Capitulation. Here we go. So if we zoom in on this, these are basically all these bands are fib extensions or fib multiples. Oh, excuse me. They are fib multiples of the realized price. Because if realized price, I got to thinking about a year and a half ago, if realized price is so important to understanding and weighing metrics in on-chain data analysis and understanding the health of Bitcoin as a whole. And I also use Fibonacci so frequently when I'm trading. I was like, why don't we do some fib multiples of realized price and see if there's any points of interest and points of confluence? And if we turn on all of these bands, we can see that these have been, you can see once we get this purple band right here, extreme hype, rejection zone, boom. When we tap that, all on the floor. You see that? Tap that and you follow the floor. Tap that, you follow the floor. We didn't even quite get up to that, but we did get into this orange zone, which is the take profit zone, overheated hype zone. So we can use this as a good metric to figure out where we're at in the cycle. And where we're at, if we zoom in really close right here, we can see prices, once we lose this band right here, this band right here is a bull control band. Let me see. Yeah, so this band right here, where we're sitting on top of this, is the capitulation and hope band. When you're coming down, this is going to be, if you lose this level, capitulation. And look, as soon as we lost this level, bang. Now, if we zoom back out here, we can also see that we are now, because we have pushed back above this, we are in the hope zone. And I feel this as a level of sentiment within what's happening in the market right now. Now, similarly right here, look at this. This is the capitulation, but you see where my mouse is right in this zone right here? We're bouncing on this capitulation zone. We're not quite getting it. As soon as we lose it, bang, down. Now here, look at that, found resistance on that hope zone. Can't quite get to hope yet. And then as soon as we pop through it, strong move to the upside. And we're kind of sitting in this sort of intermediary sort of uncertain sort of setup right now where we're below the bull floor band. So once we get back above this, things will be looking much stronger in terms of price. Now, currently the bull floor band is at about 32.7 because this is a couple days old. 32.65 or so. But we're sitting right here. Short-term holder band, which is this red band, is coming up, giving us some sort of two options. Very bullish support if we bounce off of it and make our way up. But if we lose this, we could be in for, if we lose short-term holder realized price, unless it's a very quick weekly, within 1 week time frame, wash out down like a clearing liquidity and then coming back up with a weekly close above it. If we don't get that, then we very well could get something like 2015 where we have this huge sideways action. So I just wanted to point that out. We got 249 people in here, 155 likes. Let's hit that like button. Let's ding that bell. Join us here in our family. Now, I do want to show one more thing. This is Crypto Burb. We've had him as a guest on the channel here. This is, we got I think this is a 200-day moving average. It might be the 200-week moving average, but we see this, this is moving to the upside. It's angled to the upside, which is bullish. When you have the 200-week, I believe this is 200-week. Let me just double check here. There we go. Now we can come out to weekly. Let's turn it on. Oh, I can't do it on this chart because it's not an old chart. There we go. So then what is that? I don't know. I'll have to look at that chart a little further. But the trend is rising. Main point. I think, you know what? I'm an idiot. I think that's a 200-day moving average. Let's go to the daily. Yeah, it's a 200-day moving average. So 200-day moving average. I've been looking at too much macro stuff lately. I'm just going to weeks and months. So this is angled to the upside, which is good, but it's not the end of the world. We are seeing somewhat a potential local top formation with this large. I want you to see how fast this moved up right here. This very easily could have a Bart Simpson pattern and come down and tap this down here, which would be down to the $22,300 level. This is what I was talking about in the possibility of price action coming to the downside and having some sort of washout. And we're going to have to see how things play out with this. But all we can do is look at the charts and see how we can prepare. Now, let's go ahead and if you have not yet, come over here to BitLab Academy. And if you're watching over on Hit Network or anywhere else, hit that subscribe button, join us. And if you have not yet, come in here to the playlist, view full playlist, daily alpha, come to Pro Trading View Guide. I give a lot of quick tips and quick keys on how to do things very easily on TradingView. This is a great interview. If you haven't watched this, this is some great strategy. All these, basically they're meant to be a bit more evergreen, even if you see what day they were recorded on, maybe 3 months ago, a month. This is all relevant to what's going on. This is why I put them in this playlist. Gives you a lot of good strategy. Now, let's go ahead and break down what the hell is going on in these markets. Okay, now come here. Now I'm going to come back over to, okay, that's the 200-day moving average. If we turn off everything, I didn't want to lock that. If we turn off everything, we can see that I'm going to turn off the myopic vision as well. Okay. Now just looking at the trend, price action, what's going on? We're getting a bit of we're getting a shift here. Let's look back when this shifts. When this shifts, now we have come down. Now I want you to remember, this is pre-halving, and we are also, I'm going to double click here to minimize the indicators. We're pre-halving, which is also, we saw this come up, cool off a little bit, and then go up. Let's see what happened in the past, in the previous cycle. So in the previous cycle, this just came up. So we've got two different sort of scenarios here as this rolled down, and then just once it aimed up, it went up. So we've got a 50-50 sort of shot here with what's happening. Now, this can come all the way down and tap this, and this may go flat for you know, if this were to bounce and continue to the upside, this may go flat. But bottom line is we really want to make sure that we're holding this level. If not, we could be seeing some sort of scenario, because it's not out of the question that we don't have major regional banking issues that cascade into bigger issues. Much like we saw when Celsius collapsed, it basically domino effect into multiple other collapses throughout the crypto ecosystem. We're going to see the same thing in banks if those dominoes continue to fall. And we have the FOMC meeting coming up on June 14th, starting 13th, and the data will be coming out on the 14th. Will they pause? Will they stop doing an interest rate hike? That's what everybody's sort of trying to figure out, what the heck is going on here. Now, if we actually zoom into this, if we actually zoom into this, come down to the 4-hour and really get a deeper look at what's going on here. On the 4-hour, we can also look at the 200 moving average, simple moving average. Now, if you want to learn the difference between simple moving average and exponential moving average, we have all that in the candles, in the indicators course in BitLab Academy. But essentially, simple moving average, if whatever period, if you're looking at a 200, then it's 200 candle bars. It's the average price of those 200 candles. Exponential is looking at 200 candle bars, but it's weighting more heavily the more recent candles, so that the indicator moves a bit more quickly. A good example of that, if I pull up the EMA, actually I want to do, we come here for EMA, and I want to do 200. And we can see these do track very similarly. These are both 200 moving average. One's an SMA, one's an EMA. Simple, meaning evenly weighted. One's exponential, meaning it's giving more priority to the more recent candles. And you can see this reacts faster. This yellow line is starting to move down quicker. So you can kind of get yourself a regional sort of cloud. This is what Caleb Franzen was talking about yesterday. Now, looking at where we're at right now, just on price action alone, I want to just pay attention to that we have this rolling over factor and then this rolling over factor right here. Does this mean we're going to absolutely break down from here? No, but we have to look to these structures and realize that it's a very strong likelihood. I want it to go up. We're pre-halving. Let's get that pre-halving push. It doesn't mean it's absolutely going to happen, right? We've got to make sure that we are prepared if this does come down here. I've had these two marked out for a month now, these two zones right here, that I would be a very strong buyer. Why? Because look at this. If we're losing this level, we're kind of losing. If price action comes down right here, then we're losing these previous lows, right? And we're losing this major sort of support line that it seems like Bitcoin is barely hanging on to right here. And not only is it barely hanging on to right here, if we lose this level, there's not much volume. If we come back over here to Mesopic Submersus, just looking at these zones right here, you can see over here on the left, this is one of the new indicators we'll be releasing soon. It's a VPVR that has heat maps on it, so you can quick look. You can see exactly where the highest traded volume is, as well as you have the point of control down here. There's a lot of trading down here. People are trying to figure out this bottom. But what I want you to pay attention to is this volume gap right here. Where do you see this volume gap? If you trace my cursor over to the right, where is this volume gap? From here all the way to here. So not only does the price action highs and lows of this previous local ranges, we can see that this, as Frankie Candles will call it, we very quickly could teleport right down to this level. And as scary as that would be for anybody that's not prepared, we can see that this is conveyed in the chart, that this is a very likely possibility for this to come down and tap this. Now, I'm looking at a bearish case right now if this were to happen, but it ultimately would be a bullish setup, because if this were to happen, we'd have a low, higher low, higher low. This is like stair stepping, right? Now, I'm looking at this bearish case, but if we want to see what's going on today, we can also look right here. And I'm going to turn this off. I'm going to turn on the feather. Just look at this sort of region right here. And we can see that this did fall below this line, but this is not an exact dollar level that this line was at. We can see that this is pushed up above this, but on this chart right down here, this is the one I did yesterday, remember? It's right here. We can see that this is fighting in this region, this sort of level of resistance that we had already identified before, this was a day or two ago that we had identified this level. And I showed you how to do that. We did the fib sort of retracement from this zone down to basically this level, this breakdown point to this low. And we can see this would be just like that. We can see this came right up into golden pocket, immediately rejection, and is now sitting right under this level right here. If this is not able to take this and this retests these lows, I think there's a very strong likelihood that this small push right here is just a trap for bullish liquidity, for people to get, for larger money to take trade short, so we can clear out all those longs. We can clear out all the liquidity and tap those levels down there, retest this important level. This is you could use that code, but this code doesn't work anymore. You can use that one though if you want to. I didn't even know that was still on there, but now that it's on there, you can use it for the BitLab trading stack and for the courses. Yeah, I would just buy one and then the other. We will be adding an all-in package here very soonly, very shortly. But let's go ahead and get that out, because that's not what we're talking about right now. We are talking about BitLab Market Intelligence. Let's get up the other indicators. Now, what I like to do, you see how this looks if you're zoomed out? I only have these up like this so you all can see the value of where these divergences are. When I trade, I basically come on here, I double click, I come down to show, I come down to show only last divergence right here. And my settings on market intelligence, I like 7490, which are right here. You can just screenshot that if you want. And I turn all of these on. And then I tend to turn my pivot points off. You can leave them on if you want. It's great, especially if you're newer. I turn them off so it's a cleaner chart for you all. Where are the pivot points? I forget. Show you around. This keeps the chart looking a bit cleaner. And then, so looking where we're at right now, this is a 4 hour. Let's come down to the 1 hour. Let's zoom into this. Let's get better resolution on this zone to see what's going on. So look at this, a little bit of bearish divergence on hidden volume. And we can see the price pull back a little bit right here. Now this immediately goes into these green candles. And what are these green candles? These green candles are a part of the relative extrema. This is showing this is an unhealthy move to the downside, likely consolidation or bounce. And we not only get this, we get, of course, we can see it identified on the relative extrema, but we get the blue wave, which essentially acts as a springboard, bing, and this is moving to the upside. Now this immediately flipped. I want you to notice this, how quickly the momentum indicators flip from blue to red, showing a lot of resistance at this level. And so the one thing about this is that does give me a little bit of hope here, looking at the data on this 1 hour chart, is the relative extrema. While it did, if we really zoomed into this, it did come out, but this is so inconsequential. I wouldn't really look to that. That was also only one candle. I like really only looking at the relative extrema with these pink candles or green candles. When I see two or more. So when I see one, it's like, okay, something's setting up. Two, I'm like, okay, now I'm looking for something. And when you get, the second, sometimes you'll get the other signals, but when you get the third candle being green, see 1, 2, 3, and then you can look for other signals. In this case, we didn't get any other signals, so we would have gone to smaller time frames. Same thing here, 1, 2, 3, we have the blue wave already. So we were waiting for that. And then we get this small little bounce. Where we're looking right now is, this is actually looking healthier as I zoom in on it. Although the momentum indicators show that they are a little bit overheated. So this is a little bit of an overheated move, which we can understand coming into, or overbought, I should say, coming into this level of known resistance. And it's a golden pocket sort of zone that we rejected from. Let's consolidate here for a little bit. Let's let the bulls regroup and let's get some news. Let's let the market resolve. Is it still pushing up? Yes. So we are seeing some pressure. We want to see the Dixie to fall a little bit to add some risk on appetite. But we're seeing that as it stands right now, this is essentially, if we come down, let's look at the 24-minute. This is looking a little bit like a bull flag, but we are at this level of resistance. So what we can do here, option T, kind of get our sort of. So if we lose this level, we very well could be coming back down to test first off this level right here and then continue falling. Or if the move continues to the upside, we can come like this, measure this to the upside. Let's see where this is in confluence with. Well, look at that. This move here is if this were to break out to the upside and follow through with this, the target is essentially the upper level of resistance that we have from this descending trend line, this descending resistance level that we have. So those are the two sort of levels I'm looking at. If this loses this, retesting this and likely coming back down. If this breaks out up from here, we're looking up here at 28.7747. Now, we got 15 minutes left. I think it's time for Turbo TA. Are you ready for Turbo TA? Hit those likes up. Hit that subscribe button. If this is your first time here, again, my name is Kelly Kellam. We do this every day, Monday through Friday, 10 a.m. to 11:30 a.m. Eastern time. And you can watch these in the afternoon too, because it's not just about the TA, about what's going to happen right now. We talk macro, we talk micro, we talk digital assets, traditional assets, how they can signal things for digital assets. We break down a lot of just strategy, skills, tools, resources. And so I just want to shout out everybody that's here on a daily basis. Are you ready for the Turbo TA? Let's get into it. All right, now we're going to be breaking down all the charts I have up already, and then we'll dive into the additional charts. We're going to do some quick stuff. A lot of these are going to look fairly similar, but what I want to start with actually here is coming over here to the traditional markets. Let's go to totals. Let's Bitcoin dominance. First step, Bitcoin dominance. Remember this line we drew yesterday? Look at this, bounce off this line. This is starting to look like a bit of a symmetrical triangle here. Kind of a bull flag, but you see that the length of this pole, the length of this pole is almost the same size of the length of this. I would look at this more like a more bullish leaning symmetrical triangle. Now this is coming up to the zone. I personally really like this to kind of come like this and lose, because I've been doing a lot of DCAing into a lot of alts over the bear market. But if not, then I'll take advantage of what the market is telling me. That's what we all need to do. So dominance is going up a little bit. This may be a little bit downward pressure on the rest of the market, but we can see in terms of crypto assets, we can see this has bounced, boom, boom, off this line. What is this line? This is that massive descending trend line that we had of this falling wedge. Okay. Now we can see this is bouncing here, but this is not real conviction yet. This is very blue here, though. We're looking at the 12-hour, very blue. We had the bullish divergences. We can see right there. We can see these three bullish divergences, support line, blue wave, relative extrema. This was a clear sort of setup into a buy. If this were an asset, this is a total 2, which is the entire altcoin market cap. basically all digital assets except for Bitcoin. But we don't specifically, I mean, I don't specifically trade this. I use this for signal of my alts. Now, if we come back over to our actual charts we're looking at, we can see that there is the altcoin, the sentiment of altcoins moving. We're seeing that in that index of the total two. We're seeing it move up. So we're going to see a lot of things bouncing in a similar way. We can see this. I'm moving that just a little bit so it touches as many points as possible. We're seeing right here, look how far out the relative extrema is down right here. This coming one, what did I say? What was I saying about the 1, 2, 1, 2, 3 with the relative extrema? 1, 2, 3, 1, 2, 3 gave us a signal. Now I wouldn't trade specifically on that. We're using this in confluence. 1, 2, we get the, look at that bullish divergence on the relative extrema. 1, 2, 3 is where it happens. And we have the blue wave. That would have been a signal to exit a short. Because remember, in downtrends, if you're trading this small time frame, 4 hour, that means you're trading this downtrend. You sell and then basically buy to exit your short. On uptrends, you buy and sell to exit your long. You're not, I really advise against selling short, buying long, selling short, buying long. Sell in downtrends and buy in uptrends. And that's going to be relevant to what time frame you are trading on. If you're trading 4 hour time frame and you're a downtrend on a 4 hour time frame, then you're taking short positions and then buying your longs. Now, if you're in a long-term strategy where you're buying for the position of, you're trying to just add to your holdings for assets going into the, the bull market, you're trying to just buy and buy along the way so you can take advantage of this move, then that's a whole different story. So you have to understand, do you understand the words that are coming out of my mouth? You need to understand what your strategy is. If you are a swing trader and you're a day trader or a scalp trader, and then you're trading the trend, then you're shorting these and then exiting your short positions when you're getting these signals here in confluence with these. If you're position trading for that longer term duration, then when this is coming down to key levels that you've identified, then you're taking those longs and just putting them in your long-term hold folder. Again, none of this is financial advice. This is advice on strategy that I've seen myself and other people do that works. So we're seeing here, we have this upward channel that, by the way, I'm working on a big guest for Cardano. So we will be diving into some Cardano stuff. Now, not on this episode, but here very soon. We can see that we have this rising channel, which tends to break bearishly, right? Now that's flipped to now we have a falling wedge, which tends to break bullishly. So we're getting, the market is just working the liquidity of people's emotions. So you need to do something that's different than the majority of people out there and not be selling right here because you're scared. You should have sold anywhere the signals that we had up here. What we're doing right now is on Cardano, and we're going to see this when we do a very turbo TA on a few other altcoins. We're seeing this is now having a bit of a lower high, and this is not only that, it's gotten rejected at this trend line. So looking at the fib from here, option F, come down to the bottom. Look at this. This came all the way up into the 786 and then it's basically holding now below the golden pocket of this move right here. So it's looking a little bit weak on this time frame, but if we kind of come in on the 1 hour, yeah, it's looking very, look at this perfect rejection on this trend line. It's like trend lines work or something. I'm telling you, get out there, map your charts, adjust along the way. I'm gonna take my face off and we're gonna be running through this. So what I'm seeing with Cardano is this is looking a little bit weak on the daily auto. Daily, this is looking like it's setting up. It's getting very blue. We had our setup here. So on a larger period of time, this is looking like it is an opportunity to potentially have a move. Now the move from here to this upper bar, this trend line that we have right here is about a 4% move. I would be willing to, if you didn't already take advantage of on the daily, we have we have this 1, 2, 3 plus relative extrema. We have the blue wave flash here finally, and we got a bullish divergence on support. I would have taken this trade here. Now where it's at now, I wouldn't jump in mid-move. I would wait for some sort of resolution as to what's going to happen from here. Now coming down to the 1 hour, we can see that there's a kind of a different story. On the 1 hour, there's too much stuff on the chart. Let's go ahead and turn off the mesopic vision. Okay, now we're seeing if this gets rejected here and comes down, this is now starting to look like a broadening wedge. However, it's very ugly because things are kind of to the outside of it. But this is getting rejected here. If this were to come down, let's come back out to the 4 hour. If this were to come down, we can see right here, boom, option J. And we can see this zone right here, option J. So if this were to come down and pull back from here and we lose this level, next level down, I'd look at 35 cents and 34 cents. This does break this level. I'm looking very particularly in this zone right here. I think there's a likelihood Cardano pushing into this zone, getting rejected and constricting in here and then taking this breakout. But either way, even if it comes up here and breaks out, I'd be looking at this region up here, the 37.8 cents region for continuation of the upside. Now let's just go down the list here. Algo, we haven't done Algo in a while. Now Algo is looking, I have not looked at this in a couple days. We're getting, let's go ahead and turn the, update everything here. Okay. So we have a bearish divergence, two of them, momentum and relative extreme. Look at how far out of the pocket this is on the 4 hour. This is not looking healthy, and it's getting rejected in the EMA ribbon. This was blue, very weak movement out of this zone. Strong relative extremist signal coming into this, but then strong blue wave, undervalued, but very weak movement. I think there's still a little bit of uncertainty about Algorand and the sentiment, not in the reality, but in the sentiment of people because of that Bittrex, was it Bittrex or I forget which exchange, the SEC lawsuit that listed Algo as potential security. I think that, I know I took some profits out of Algo and moved into, what did I get? I got ICP and I allocated some to Scale, which is just another layer 2 solution. So we can see this is looking a bit weak. Now, does this mean it's absolutely going to roll over to the downside? Not necessarily. But as it looks right now, I would look for this probably retesting this low here at 1624, which isn't that far down. But if this does, that's on the candle body. On the wick, the low is 1579. If we were to lose that, then we can visit that later. This is looking a bit weak to me, although this is trying to roll. Now let's look at Atom. Atom has this level, this level right here. These two boxes or this one box is a volume anomaly right here, volume gap, and this is proven to be resistance. This is looking a little bit stronger than Algo on the 4 hour because this is pushing in all the way, almost all the way through the EMA ribbon. We got the relative extrema, green bar. We got the bearish divergences, bullish divergences. So this is the green bar is a 1. The bullish divergences is a 2. We got the bullish divergence on the hidden volume is a 3. And we had this basically signaling that we are undervalued coming into it, blue. So this would have been just a clear, very easy scalp trade right here because we had the 1, 2, 3, 4 setup. And this is not even looking at, I don't have any TA of charts drawn on this. So if we did this very quickly, we could see, okay, option J. Let's kind of do. So just looking at these zones, yeah, we can see that this came down to previous price action. So we would have seen that. It's just not on this particular chart because I haven't done TA on this in a while. Option T. See. So this high here, we could even go all the way out to here. No. This high, bounce. Okay, so we got multiple points of confluence here with the bullish divergences. This is looking stronger bounce than we've seen on the other ones. However, it still has a lot of work to do. Now with this, we can do option T, come down here. This is going to be a little bit ugly because I'm doing it so quickly. But I kind of feel like it'd be more like that with that anomaly sticking out because this bounced and then this rejected. So with Atom, I'd be seeing, yeah, there's still a bit of a move here. Option F, we might be coming just below. Yeah, so if we're not able to overtake this, then this is a bit of a trap and this is going to come down and retest and potentially go down lower. If this can't make its way up to the golden pocket, which is also in line with where this line is, then we're going to see weakness come back into the market relatively quickly. Now coming into, we did not do Ethereum, so we should do Ethereum. Okay, 12 hour, let's do 4 hour. Okay, we have, two levels. We see these boxes. These boxes are auto-populated from the mesopic vision. See here, these are volume anomalies, volume gaps, order block gaps, and liquidity tends to go back there. We can see price action did go back there, but we're seeing a very strong relative extrema weakness on this candle. The candle's already come down, you know, in the last 4 hours, over half. Over 50%, and we have 3 bearish divergences. So this is looking a little bull trappy, meaning getting the bulls to go in, getting people to buy up here. Smart money takes better advantage of the shorts to come to the downside. So this is looking a little weak right now. If this can close above this level, I'd be a little, not bullish, but if this comes all the way back down, then you have just an absolute shooting star, and you don't really want to see that on such a weak, on this weak sort of impulse to the upside. Coming down to the 1 hour. Now on the 1 hour, the 1 hour looks a little bit more bullish. This is why it's good to look at multiple time frames. The 4 hour is looking like it very well could roll over, but this is looking a little more bull flaggy. But with that being said, you know, we did have the relative extrema pink bars here, which is showing that this is outside of the norms. And we're consolidating here, but we are a bit overheated. So maybe this flips back to gray, and then we could get one more attempt. This is on the 1 hour chart. I'm actually gonna do this a little more conservative, like that. This bull flag, and this would take us up to basically right about the previous high. So those are the 2 levels I'd be looking at with Ethereum. Now, AVAX, we can see. You know what? I don't want to do AVAX because I have another chart for that. Now, come on here, avalanche right here. So this is trying to get through this level of resistance. If this is lost, then this is going to be fairly bearish for AVAX. If we can't bounce above this hold and then continue to the upside, this is what I'd like to see. But we're having trouble. AVAX is having trouble right now. Option F, come to the bottom. Now, question from Indio Rocco. Is there any way you can make an indicator that shows open orders, like a bookmark or whatever? Yeah, like the book map. Well, I mean, we could do that, but that's a whole other thing. I like with the new mesopic vision, you know, seeing these order blocks, seeing these anomalies in basically liquidity and where you know, during price action. We're not seeing it right now on Avalanche. So we can see these. It's showing where liquidity is, and we're seeing it. It starts essentially over here from the left, and it's projected across. Now I can make this project out. Let's see. Here we are. I can make this project out as far as I want. I just had it cleaner by making it smaller. And we can see this is going to be likely resistance when we come back up into it. And look at that, resistance. Now this is going to be likely support, this blue coming here, all the way from over here. This is going to be likely support. And this did come down in this region, broke it, but kind of interacted and then found it as support again, right? So, and this is only changing because as I change my screen, it recalculates. And we're seeing this time and time again with where price is. And look at this. This is all the way from back here, and price is migrating back down to this level. So does this mean on Avalanche, we could be coming back down to clear this sort of liquidity anomaly down here at 1466? Well, we very well could. Let's kind of do a couple more before we go. Gala, I know everybody was worried about Gala because of the delisting. Looking relatively weak. As it looks right now, this doesn't look supported because of see how they're red because the relative extrema is sticking to the upside. Now, looking at this on the 12 hour, yeah, this is looking relatively weak. A 2 hour, so we have, look at this. See, this automatically just printed this volume sort of order block gap that we have right here, and this is coming right up into it. So I'd be watching this area, 32 cents, not 32, 3.2 cents. If we were able to clear this, then we may be able to continue up to the upside. But this is a level I'm watching on Gala. If this gets rejected, then we're probably coming back to retest the 2.7 cents Filecoin, we haven't looked at in a while. Let's look at some Filecoin. Okay, these are the levels right above us. See this? $5.44, $5.54. But this is once we make it up there. If we look at the most recent move, option F, top to bottom, you can see the golden pocket is right in this region right here where this price action interacted, but it's right here. So right as it stands right now, all we're doing is coming up into this. See these wicks right here? See this try to the downside? Look at this. This is coming right into this resistance. If we can't even clear that, then I think this is going to be anemic and come back over. As it stands right now, it looks like the red is starting to form, meaning overheated. We haven't even moved that far and the momentum's overheated. Not a great sign. 4 hour is still gray, but meaning neutral. The relative extrema right here is, I mean, the whole thing is just looking unhealthy on Filecoin. This doesn't mean that it can't continue to the upside. It very well could. Now, very quick look, last minute or so. We're going to come here. We're going to go to alts. Just a quick turbo, super turbo. The graph looking the same. It's having trouble pushing into this EMA ribbon. If we turn on the mesopic vision, okay, we don't have any sort of. So looking here, yeah, this is looking very weak on the graph. But this is something when it drops. See, these are the levels that I have from before. Down here at 10, basically just shy of 11 cents, right at 11 cents, or just below that at 10.5. I'd like to reallocate some funds there, and if we lose that, then I'd be looking in this region down here. I'm a buyer of the graph on any dip because of its sort of, it's not part of AI, but it is. It's part of that narrative, and it's aiming to be. This is a wrong narrative. It is the case, but it's a bit different. The Amazon, the Google of blockchains, being able to index all different blockchains so you can really find information across multiple chains very quickly. It's not like interoperability like Atom. It's more like being able to categorize, index, and catalog data that's across multiple chains. ICP coming right into the zone. It is kind of right here still at this golden pocket. It's right at the point of control too. See this pink line, point of control. If we can't sort of break above this, then we very well could be testing these lows again. If we're able to come up here, then it may be off to the races. Hedera hash graph, weaker move than all of them on this one. All these, look at that. We're getting quite a bearish setup with 1, 2, 3, 4 relative extremist signaling. This is neutral. Let's go to the 1 hour. It's looking red. So I don't know on this. This does look like it is pushed into the EMA ribbon though. This is these bands here. And if this is able to get up, I'd be targeting up here at these zones, this sort of 5.6 to 5.7 on Hedera. And the last one we're going to do here, just because it was already up. Scale. This is looking similar. I forget what one of the ones we looked at earlier is looking very similar. If we can't clear this, then I think we're coming down. The full move here, option F, top to bottom would be, the golden pocket right at this high. This is where I'd be looking at for scale. And if we want to do one more, we can do, we did not do XRP. So let's go ahead and do XRP. This is looking a little bit like a bear flag. But this is getting quite a bit, this is consolidating quite a ways, but this 1, 2, 3, basically this bearishness is dominating here. Is there suppression going on in the market? I don't know, but I'm a buyer on dips as it stands right now. So this is looking a little bit like a bear flag. Why do I say that? You can kind of do it a number of different ways, but stair step down, stair step down. Now, if this is able to break this this small resistance level right here, then we very well could be coming up. But we've got a lot of work to do on XRP. Why is my mesopic feather on? So point of control is up there. Let's turn the submersus. Okay, now, so you see where we're at right now. We're coming right into this liquidity block, which is this right at resistance. So if we're able to clear this, then we might be able to try back up to 45 cents, which is this previous low right here. Right next to where this point of control is. I think we'll have a little bit of a battle here, and then we'll make our way back up to 47 cents if we clear this. If not, then we may be looking at another leg down, which would be boom, testing these lows, 41 cents, and then likely 39. That's what I got. I love you all. make sure you go and check out BitLab Academy YouTube page if you have not yet, which is right here, youtube.com/@BitLab Academy. Yes, many of you watching us here right now, but this is also streamed on Hit Network and it's also re-aired in some other places. So come and check us out. Check out bitlabacademy.com. All these socials down here. And if you have not yet, go to BitLab Academy's Twitter page right here at Academy BitLab. Retweet this for a chance to win. You're basically going to be entered to win. Retweet this, hit the like button, follow BitLab Academy, which is at Academy BitLab. I'm going to put that in the chat right now for you all. Yeah. So Alexander G just shared it. Retweet this. You get entered for a chance to win. And get involved. This code, give me 30, is not going to be valid for very long. I'm not going to tell you how long it's going to be valid for, but it's going to be only a matter of hours to days. So use that if you want to go get involved at BitLab Academy. Just come to bitlabacademy.com. You can click on start right here and then just jump in right on the bottom right here. I want all access. Or on the top right, you're going to see enroll. Click enroll. Join us here in BitLab Academy. That's all I got for you. I love you. I appreciate each and every one of you. I hope you appreciated my rant at the beginning of this. If you came in late, go back, watch that rant at the beginning. I think there was some valuable information in there. With that, have a wonderful day. Adios, muchachos. Thank you for coming. Thank you for tuning in. BitLabAcademy.com. Hit that like button, sucker.